Alright guys, why do stocks go up and down? Let me explain this shit right now for you guys. For the first category, it's just supply and demand. I said the same shit for crypto. You could literally break down everything by supply and demand. Anything economic. Maybe not like getting girls or some shit, but even then you probably could low-key. So the way this works is basically the more of something there is, the more supply, the lower the demand is. The less of something there is, the more the demand. Generally speaking, it could really depend, but that's essentially what it kind of breaks down to. So for example, during like 2020 to 2021, a fuck ton of new retail investors started buying shares of Tesla. So the demand went up like crazy. The price of Tesla went from $90 in early 2020 to over $400 in 2021. And this is split adjusted. I think like if you look at the actual price history, it won't say that because they like had the split thing. I'll explain that in a different video. Next category is company news. This is a huge factor. For example, in 2023 when Microsoft announced like a partnership with OpenAI, their stock jumped like fucking crazy because AI is the fucking future. And I guess a bunch of people were like, yo, I fuck with this. And also because OpenAI is like the #1 AI, you know? Like if they had announced they were partnering with fucking Perplexity AI, I mean, sure, it probably would have jumped, but not the same way as it would have been with OpenAI, you know? This could literally work in the opposite way. An example, some horrible shit happening is like Boeing in 2019 had like multiple plane crashes. Bro, after that fucking happened, their stock went down like crazy. Bro, did y'all hear about how Boeing killed some guy because he was like some whistleblower? That's also insane. I don't even know if we should talk about that, but next is earning reports. So every publicly traded company has to file earnings reports every quarter. This is like a public report basically saying on how much they made / lost every quarter. So ideally, if a company makes more money every quarter, that's a good sign and people would invest. If a company takes a loss for the quarter, that's gonna fucking make the stock go down. I'll give you guys a short story. I thought I was Mr. Genius for a little while ago. At this time, this was like kind of a lot of money for me. I put like, I think $100 in Dave & Buster's the day before quarter earnings were gonna release. And yeah, it went down 15% after they released because Dave & Buster's lost money that quarter. So I did too. Do your proper research when you're looking at quarter earnings. If you want to make a trade based off quarter earnings, look, have they repeatedly beat quarter earnings? How do their financials look? What is the PEG ratio? That's some ball knowledge. Next is interest rates in the economy. This is just going to fluctuate the market because companies rely on the economy to do good, because when the economy does well, it kind of trickles down over every single company because companies can afford to hire more workers. They can afford to put more money into their business. So for example, in 2022, when the Federal Reserve raised interest rates to like beat inflation, this caused a lot of the companies to go down at that point because when interest rates go up higher than the average, they usually go up. Companies are just gonna fall. And also like at the time of this recording, there's like this whole Iran thing going on where Iran, the US and Israel are like feuding, just being some petty bitches in the back of the class arguing. I'm not even gonna talk. Iran's probably fucked right now. Their economy is probably doing dog shit. At least for the US, I know our stock market's down right now just because oil prices have gone up, which I guess is driving the whole economy to go down. Now, the next category is industry trends. So a lot of times a whole sector will do good just because of like a specific trend going on. A perfect example is this AI boom that's currently going on. Stocks like Nvidia, AMD, they had a huge surge in price just because they like switched their whole company focus to like producing AI chips. Yeah, that's just gonna drive the price up. A lot of times in these big booms / bubbles, companies will just go up based off the fact of like it's trendy. Like during the .com bubble, a bunch of internet companies were just getting money thrown at them just because they had the word internet integrated in their business somehow. When it came down to it, a lot of them lost value just because there wasn't much backing them. Next example, big investors / like institutions. So when large funds buy or sell a huge amount of shares, that could drive the price up. An example of this is when Berkshire Hathaway, they had bought a fuck ton of Apple stock. By doing that, it increased other investors' confidence because they're like, yo, if the price is being driven up, it's gonna go up forever. That's kind of what they think in their head, or they at least think it's gonna go up for a long time. They kind of ride the wave in a sense that other people will start. So that also kind of ties into the next category. And the last one I'll mention here, investor psychology, fear / greed. For this example, let's just talk about the GameStop era. Back in like quarantine era, 2021-ish, GameStop literally surged in price because of this whole Reddit meme saying like, yo, let's just all buy GameStop. And a fuck ton of people bought GameStop initially, and that drove the price up. And then random fucks just saw GameStop going up and were like, yo, let's join this trend. And not even knowing that there was like an artificial trend going on, they just bought it just because. It went from $20 to $400 in a very short amount of time. Guys, I'm gonna wrap it up right here. Let me know what you think in the comments, and I hope you have a great day. Peace.